Market set to rally this morning after Friday's sell-off. Can we get some follow-through? That's coming up on 3 minutes on Markets and Money. 2 weeks ago, we started this rally coming off this support that we had built over about a 2-week period. Had a nice rally. Last week, though, that rally really kind of stalled out. Didn't really make much in advance. Actually kind of finished the week down just a hair. Importantly, though, we didn't give up the gain that we had starting on Monday. So markets kind of consolidated all week. This morning, futures are set to open higher, and it looks like the markets are going to try to make another advance this week as well. Not surprising here, still on a MACD buy signal. That's good news here. Markets are a little bit overbought short term, which might suppress a little bit of this rally attempt to some degree. But here's where the real challenge is. Right now, markets are struggling with these bottoms that we put in back here in April and then back here at the Russian invasion of Ukraine. Once markets broke those lows, that's been the real challenge here to get back above that level. The other not so good news here is that the 50-day moving average is rapidly coming down on top of these prices as well. So once the markets get above the lows of April, we're going to immediately be challenging the 50-day moving average. That's going to provide more downward resistance, which also coincides with the downtrend line back from earlier this year. So again, a lot of overhead resistance here. Markets have a lot of work to do, but there's still a lot of negative sentiment in the markets, which suggests there could be some upside to the markets here, particularly in the month of June, which, of course, this is going to wrap up the quarter. A lot of mutual funds, pension funds, etc., still well off sides here. They've got to get that money allocated. And we have a $3.2 trillion options expiration coming up the third Friday of this month as well. All of that could give a bit of lift here to the markets. Again, there's not a lot of upside here, and we continue to suggest selling into this rally until we get a better handle on exactly where this market's going. As long as this downtrend stays intact, we've got to use rallies to sell into, raise cash, be a little bit more defensive. If we can clear this downtrend line, get above the 50-day moving average, then we can come a little bit more optimistic on the markets here, at least in the short term. But again, don't forget, we have the Fed starting quantitative tightening this month. $60 billion. That's twice the level they were doing back in 2018. That's going to increase to $90 billion by August, and they're going to be hiking interest rates. Again, not a lot to get excited about here relative to the markets in the short term, but watching price action, we can at least make some better guesstimates about where markets are going to next. That's 3 minutes on Markets and Money. See you back here tomorrow.